National Bank of Ethiopia's top leadership has held talks with the Moroccan-based Attijariwafa Bank as well as the KCB Group from Kenya to discuss their bid to enter the Ethiopian financial institutions. Reports that came out last week citing top officials from the National Bank stated the country is gearing up to issue up to 5 banking licenses to foreign investors with a choice of forming joint ventures with local banks or establishing country subsidiaries. With a population of more than 100 million and a yet untapped banking potential, the Ethiopian financial market has been seen by foreign investors as a venture worth taking for the past years, and with the recent meeting indicating top African banks pushing to enter the market. The Moroccan-based Attijariwafa Bank is one of the top banks in Africa and the Middle East, which signed a memorandum of understanding with Nigerian Union Bank to expand the institution's footprint in Africa just last November. The bank has a reported 25% market share in the Moroccan banking system, managing $64 billion worth of assets. While the Kenyan-based KCB Group looks to enter the Ethiopian market, making use of recent changes to the country's policies. The bank's group CEO has stated previously they are planning to buy stakes in the already existing local banks, in which he said in a Bloomberg interview last month they are talking to 3 potential targets. The Kenyan-based bank has footprints in a number of East African nations and is one of the 2 biggest lenders in the Kenyan economy. While privatization talks have been going on, the National Bank has taken steps to protect the financial security of the country with deposit insurance to be issued by the bank. Up to 200,000 birr deposited in banks is to be insured by the newly established Deposit Insurance Fund, guaranteeing, according to National Bank's Deputy Governor, 96% of current bank users in Ethiopia. The Deputy Governor also stated for the reporter, banks and microfinance institutions will have to pay a 2% annual premium to the Depositors' Annual Insurance Fund, with an unspecified amount yet to be paid at the launch of the insurance. The fund is established to protect depositors in case of a financial crisis that might happen to banks where they have deposited their money, guaranteeing they will receive their deposits and potentially avoiding a bank run. Recent cases of deposit insurance has been seen in the international financial market, with the fall of some US-based regional banks and Credit Suisse marking the need for guaranteed money back to depositors.